Oh, it looks like the new job reports came out here recently. Maybe I should take a look and see what they say here. Okay. So strong job growth is back. Payrolls jumping in June well above expectations. That sounds nice. Job numbers reveal a hidden weakness in the U.S. economy. Interesting. Will the Fed cut interest rates to prevent recession? 6 predictions. Wait, lowering interest rates is rooted in depression? Watch out, investors. What is going on? Do I buy or do I sell right now? What should I do? Hey you guys, welcome to Young Money Investments. In today's video, we are going to be talking about the potential for a correction that should be very imminent and very soon. The markets are very up and down and kind of topsy-turvy. In today's video, we are going to be talking about that. We are going to be mainly covering the reasons why I believe the warning signs for a correction are on the table and in plain view, and why we are seeing a lot of people ignore the fact that a recession should be happening based upon market data as well as technical analysis. Let's get into it. All right, you guys, so taking a look at one of these articles found here on Fortune, it is saying that basically the Fed chair, Jerome Powell, has spent a couple of days answering questions on Capitol Hill, and the world wants to know, will there be a rate cut? Basically what Powell says is he says that he believes that the economy is in a good place. He sees that business investment is slowing a little bit. It's kind of basically made on uncertainties kind of surrounding trade and regarding interest rates and things like that. But overall, he thinks that the economy is going strong. He doesn't see a reason or a need to be cutting rates. Now, the funny thing with the Fed chair kind of coming out and saying that, Jerome Powell obviously has butted heads with Donald Trump. This is something that I find very interesting. He thinks that the economy is in a good place. Donald Trump keeps saying we need to cut rates.
The Fed should drop rates.
He wants to keep edging those markets higher. The other thing that will continue to edge markets higher is if we do get a trade deal done with China. If that can be done, that will obviously push markets higher. I want to get into the technicals and kind of talk about that, but this is something interesting that Jerome Powell had just recently said after the 2019 job reports have come out this month. One of my big problems right now with the market that I believe was kind of deceptive when these job reports came out was the number of jobs that were reported that were, let's get into the facts. Let's just jump into the numbers. I'll explain this a little bit more clear. So basically taking a look here at this article found on Yahoo, you can see that the U.S. labor market is telling us one thing and doing the opposite. Now, what does that mean exactly? On one hand, it's basically saying that employers are telling us that there's a massive demand for workers. There's basically 7.4 million job openings right now. That data also shows that 5.9 million unemployed workers are out there who could, in theory, fill those jobs. So that is definitely an interesting, food for thought or kind of item to take into consideration. As we look at this, 102,000 jobs versus 7 million job openings. It's kind of like, why aren't those getting filled? That's a very questionable and doesn't make a lot of sense. You go 7 million job openings, but the U.S. can only add 102,000 jobs. Like the number of jobs added basically like barely beats the weakest jobs like in a month in the past year, basically since November 2018. This is very interesting to me. Like besides the statistics, like the technical analysis, which I'm very big on, the interesting thing right now with the job reports is that yes, we beat numbers. The numbers were higher, and I think if we pull up the other article right here, you're going to see that strong job growth is back. It says payrolls jump in June, well above expectations. Some of the main points from this is that payrolls rose 224,000 in June. The expectations were 165,000. So that's according to the Labor Department. The unemployment rate did edge higher a little bit, and that's to 3.7%, but it's still near 50-year lows. And wage growth was 3.1% year over year, but that really, it was like nothing over the past month. It was like 6 cents, I think, from the previous month. So nothing big. This is my problem right now. And this is a number that I believe that no one is talking about. And that is the fact that a lot of these new jobs that were added to the marketplace are summertime jobs. They are jobs for college students. They are jobs that, these hundreds, probably over 100,000 jobs have opened up during the summertime for college students. This statistic is not being reported by the Labor Department. The Bureau is not reporting that these are part-time college jobs. These are just jobs added. And this is obviously kind of a statistic that no article that I found is really covering. And that to me is kind of concerning. The reason why it's concerning for me is because the reports will get a lot worse as September rolls around and as those college jobs that were created during the summer months dry up and those college students go back to school and they're not working those full-time jobs anymore. All right, and the second reason I believe that warning signs of a correction are being ignored is the technical analysis. Now, technical analysis is very important to me because past history tends to repeat itself in the market, right? That's just what happens. So let's take a look at the charts here, you guys. And as you can see, this is a chart of the past 180 days on the S&P 500. As you can see, this was our movement down back in December. This was our movement down here back at the beginning of June. And as you can see, since that movement, we have had a run up of roughly about 9.5%. I mean, if we really want to tap the bottom, right, you guys, 9.5, 9.6% is basically what the S&P 500 has run up since this low, since this little pullback that we saw here not too terribly long ago. Now, if you compare it to some of the pullbacks that we've seen previously, now granted, you can see this little run up we had, this was a 10% run up, then it ran up all the way up here. We had a massive run up. But I want to take a look a little bit further out because basically since December, over the past 6 months, we've seen the stock market really have no pullback whatsoever. We take a look at the chart here on the 1 year, and you can see where we had kind of some channel pattern going on, a lot of inconsistencies in the market, which is interesting to me because of the fact that right now we're in a very inconsistent, unpredictable market, yet we are still seeing this edge higher. As you can see down here, when we started to have some uncertainty, this was back in like October, November, we saw these highs and lows kind of in this channel pattern before we saw it tank. Now, this is what's interesting to me is, down here we're seeing a return or an increase of about 7%, and then we see it sell off. Again, another 5-6%, and then we saw it sell off, kind of going back and forth. We are not seeing any of that pullback. Literally, the only pullback that we've seen is here, and this was a pullback of, 7%. We've gone now, this was happening almost every month. We have basically gone another, about month and a half of not having a pullback, and since then we have broken through this level of resistance that we had right here at around $294. So if we were to draw a level of support or resistance, we would say right here 294, 295 is about a good level of resistance. We saw it top out here, we saw it pull back and then continue up. Now this is all-time highs for the SPY, and that is something that is very important to also remember. And also remember that whole numbers are a very big important category in any stock. Anytime you're coming up on 100, 200, 300, $1 in the penny stock market, $5, $10, those are normally pullback areas. This for me, again, you combine that with the fact that the RSI is overbought. We need to have some sort of a pullback. It is not pulled back below our EMA, and we are not seeing it pull back all the way to our SMA. So this is just one of those crazy things that I personally believe when you combine with the weak reports and the job date and the jobs coming out for July, it just to me says we are going to have a pullback. The question is not a matter of if, obviously it's a question of when. I don't see that this being the next pullback is going to be the market crash. I'm not saying that whatsoever, but I am saying if you are long in a lot of stocks, you need to be very careful at this level in the market because it is going to most likely end up hurting you long term if you do not actually pay attention to the fact that the market is at a very high number. and needs to have a pullback fairly soon. So if you like that analysis, please give this a thumbs up. If you didn't like the analysis, give it a thumbs up as well. I'm just messing with you guys. But if you like videos like this, please leave a comment below if there's other types of videos you want to see. Also, let me know down below. Please hit that subscribe button, hit the bell notification. If you want to get into my private mentorship where I go live daily, check that out. The link is down there in the description. I also have a course that I also go and teach you everything that you need to know about the stock market, technical analysis, talking about 10Ks, 10Qs, all the fundamentals as well. And I really stuff as much information as I can into that course. So I will talk to you guys in the next video, and I cannot wait to get back at it, creating more good content for you guys. Catch you guys in the next one. Bye.